Hi class, this is Liz Brown, your professor for 2301 Financial Accounting at Richland College. Let's work the problem together. We're going to do the Longhorn problem from in your book. I will read the problem to you, but all the information you need is seen here on your screen. Longhorn Corporation provides low-cost food delivery services to senior citizens. At the end of the year on December 31st, the company reports the following accounts. As you can see here, we have cash of $1,200, equipment of $29,000, accounts payable of $4,400, delivery expense of $2,600, salaries expense of $5,500, service revenue of $67,700, cost of goods sold $53,400, buildings of $40,000, supplies of $3,400, and salaries payable of $800. In addition, the company had common stock of $40,000 at the beginning of the year and issued an additional $4,000 during the year. The company also had retained earnings of $18,200 at the beginning of the year. What is required? We are going to prepare the income statement, statement of stockholders' equity, and a balance sheet for Longhorn Corporation. All right, so let's get started. First, let's go ahead and walk through these accounts to determine what types of accounts they are, and that will help us determine which financial statements they go on. So cash. Now, a quick place to look on here would be the chart of accounts if you need help, but cash is a resource of the company, so that's going to be an asset. Equipment, also a resource of a company, so an asset. Accounts payable, that's a hint there. A payable is going to be a liability. Now, these types of accounts, assets and liabilities, are going to go on a specific financial statement. They are going to go on the balance sheet. Next up, we have delivery expense. The word expense is a clue on there. This is an expense account. Salaries expense, also an expense account. These are going to go on a different financial statement. These are going to go on the income statement. Over here we have service revenue. That is a revenue account. Okay. Now, this one is tricky. Cost of goods sold. Cost of goods sold, another word for that is food expense in this example. Cost of goods sold or food expense is going to be an expense on the income statement. All right, chart of accounts is a great place to look for help with that. Buildings. All right, buildings. We are back to a different type of account here. Our buildings are a resource. Those are going to go on our balance sheet. We also have supplies. Supplies are an asset as well. Those are going to go on the balance sheet. Salaries payable. Another hint with that word payable. Those are going to go on the balance sheet as a liability. All right, in our additional information, we have our common stock. Those are going to be on statement of stockholders' equity and our retained earnings. Let's pop over here and look at what we've got here. We've got the income statement, the statement of stockholders' equity, and the balance sheet. So there's definitely an order that we're going to follow when we do a financial statement. We're going to start with our income statement. That is going to give us our net income. Our net income is going to flow into our statement of stockholders' equity. And finally, our retained earning balance is going to come over here and be in our balance sheet. So let's start up here. This is laid out in an easy to follow manner here. Very important to put our title up here. You've seen the title on all three of these statements, but if you're doing this on your own, be sure to put a title. So we'll start with our service revenue. Let's go to our given information. Our service revenue is $67,700. All right, we'll go ahead and type that in. Okay. Our cost of goods sold is listed under our expenses. Let's come over here. Got a cost of goods sold of $53,400. Okay. We have salaries. That's going to be an expense as well. $5,500. Delivery. Delivery expense here, $2,600. All right, this is going to give us our total expenses. You guys can run these on your calculators at home as well, but I'm going to go ahead and drop in this number here. We're going to take our total revenues, we only have one in there, and subtract our total expenses here. So $67,700 less $61,500 is going to be $6,200. Great, there we go, correct. Okay, here we come down to our statement of stockholders' equity. Now, this is set up like a grid. We have our words down the left-hand side, and we have the words up here across the top. Now, this can be very confusing as we feel that possibly we need to fill in each of these blanks, and that's not the case. So let's walk through these together and figure out what items need to be updated for common stock and what items need to be updated for retained earnings. Okay, so beginning balance, common stock. We are going to look at that in our given. So our common stock beginning balance is going to be $40,000. Okay, issuance of common stock. Yes, that falls under our common stock section. So we're going to come over here. We issued 4,000. So we'll drop that number in here. Add net income less dividends. These are things that are only going to affect our retained earnings, not our common stock. Net income and dividends do not affect common stock. We are going to leave these blank. Our balance here is going to be $44,000. Now, this is something that can be very confusing for students. Remember that we get a 5x8 note card on our exams. So this is a good time to talk about this. You get one 5x8 single-sided, handwritten note card for the exams at Richland College. So, as you're doing your homeworks and your practices and your quizzes, jot down those items that help you the most. Possibly something on this statement or the order of these statements might be what you want on your note card. So be keeping that in the back of your mind. All right, let's go to the retained earnings column. Beginning balance of retained earnings. Okay, here we go. Retained earnings at the beginning of the year. $18,200. Great. Issuance of common stock. We've already done that. It doesn't relate to retained earnings. We are not going to fill in that blank. Net income. Where are we going to get that? Right, we're going to get it from up here. So we're going to drop that number in. Less dividends. Okay. We are not given any information that we had dividends. So we are not going to fill that in. But if you do have a problem that gives you dividends, that would go in that blank. All right, so what we have here, if we add these up, so take a look on your own calculator, but we're going to have $24,400. Now, this total line is just going to be a sum of these numbers across. So we're going to have total stockholders' equity of $58,200. We're going to have issuance of common stock of 4,000. So I'm just doing 4,000 plus 0 is 4,000. Same over here, 6,200. 0 plus 6,200. No dividends, so 0 there. And we're going to have an ending balance. It's going to add this way and across of 68,400. Great. So let's do our balance sheet. Okay. Cash. Let's go over here to our given. Our cash was $1,200. Supplies. Okay. Supplies, $3,400. Equipment. All right. Equipment right here, $29,000. And buildings. All right, our buildings are $40,000. Total assets, if we add these up, you can follow along at home with your calculator, is $73,600. Great, got it correct on that. Liabilities, look at those two payables here, so that's a good hint on our liabilities. Accounts payable, $4,400. Salaries payable of $800 for total liabilities of $5,200. Common stock. All right, what is our common stock? We have common stock at the beginning of the year and common stock issued. we need to look up here on our statement of stockholders' equity. All right, our common stock is $44,000. Retained earnings. We were given a beginning balance. We need our ending balance. Right? These statements build. We do them in order. So we start with the income statement. Use our net income to come down to the statement of stockholders' equity. Using that, we're going to get our new retained earnings. All right, that's going to be $24,400. Total stockholders' equity is going to be $68,400. All right, and now we have the moment of truth. Right, with the balance sheet, we need the assets to equal the liabilities plus stockholders' equity. We need to add $5,200 plus $68,400, $73,600. All right. Now, a couple of important things just to remember, like I've said a couple of times here, these are building statements. Always start with your income statement. Go to your statement of stockholders' equity. The balances in your statement of stockholders' equity are going to line up with the balance on your balance sheet here in your statement of stockholders' equity. Now, also what we're seeing here is we had net income of $6,200, and we have choices with that. We can choose to either keep or retain that net income, which we did here and put it in our retained earnings, or we could pay that out as dividends, which we chose not to do in this problem. So there's two choices there. All right, guys, thank you. I hope this was helpful. If you have any questions, please reach out to me on the discussion board.